Thank you, Mr. Chair. Appreciate it very much. And thank you, folks, for sitting through this for a couple hours now or going on that. I appreciate it. Part of the American dream is everybody wants to own a home. That's good. However, up until roughly 2002, 2006 or 7, it seemed like there were Washington regulators who were putting lots of pressure on banks to make sure they enticed families to buy homes even though they couldn't afford those homes. Sometimes they pressured banks to offer no money down. Some folks that applied for homes didn't have jobs, but they were still given credit in order to entice them to take on more than they could chew off. And then when these folks couldn't make their mortgage payments, the housing market collapsed. And with that, it took the financial services industry, or the financial markets that collapsed. And so here you have these families who are now going through this process of losing their homes, or going through bankruptcy, and some of the reason for this happening were the bank regulators here in Washington. Now, in my district, which is western, central, northern, and down East Maine, some of the hardest working people you could possibly find, they saw the value of their homes plummet 40, 50%, subsequent to the market crash. And folks that were saving for their kids' college education or their retirement saw their savings in mutual funds and 401k plans plummet 20 or 30%. So now they're in a position where they have to work longer. Their nest egg has shrunk, and now they're more and more dependent on the government. Not to say that we have a Social Security system that is a $15 trillion unfunded defined benefit pension plan with no real plan to take care of that. So, of course, after this happened, Washington knows best. The big brother government sort of ran to everyone's rescue. Even though they helped create the problem, they imposed this huge Dodd-Frank net over the entire financial services industry. And, I come from Maine. We do a lot of fishing up there. And sometimes the net should have holes in it big enough for the small fish to get through. So we have a real problem here in our district with small banks, and as my colleague, Mr. Green mentioned, he may not want to call them small banks. I call them community banks, but whatever it is, we get a lot of small credit unions and small financial institutions, small banks that are the backbone of our economy. And they want to lend money to individuals who want to buy a new truck or maybe put a new diesel in a lobster boat. And they're unable to do it because of some of these regulations. And so what happens is the cost of regulations go up. Bank fees go up. You talk to Larry Barker, who runs the Machias Savings Bank in down East Maine, and they have about 100, 120 employees, and they're putting more people on the payroll to deal with regulations, instead of lending money to folks who need it. So I am really concerned about this Dodd-Frank net, who will start to smother our small banks that are the backbone of our community. Jobs are being lost, credit's not being extended. And then if you go over to the investment management space, you have fees going up and rates of return on retirement savings going down. So what I'd like to ask you, Ms. Pierce, first, if you don't mind, is do you think, can we agree that this is happening? There should be reforms to this regulatory burden. And specifically, what would you recommend? How can we help our small community banks keep money flowing to our families, grow businesses so they hire more people?
The Mercatus Center did a study a couple years ago on small banks and found that, indeed, they were suffering very heavily. And it was this concept that you mentioned of spending a lot more time on compliance, trying to hire more compliance employees. But even more important than that is the manager's time is now going towards thinking about compliance and regulation instead of consumers. So the answer, I think, lies in simplifying bank regulations. You could have a simple capital standard, for example, and then in return for that, you eliminate the other regulations that require a lot more time to think about complying with. So I think the simple regulations can benefit banks of all sizes, but I think especially small banks will benefit from that change.
So you do believe that there should be and could be reforms to Dodd-Frank?
I believe that reforms are necessary to make the economy work better.
Mr. Mahoney, what do you think?
I agree with that. I've been struck by the number of bankers that I've spoken to from banks of all sizes who now say, my primary constituent is no longer my customer, it's Washington, D.C.
I hope you folks speak up. You have a tremendous amount of authority and influence here in Washington with your experience in this area, so I hope you speak up, and I'm very grateful that you're here today. Thank you.